Podcast is now starting. All attendees are in listen-only mode.
Okay, good morning, everyone. Welcome to the Yankee Model Investment Club. We are a real functioning investment club. We meet solely online, meet monthly. And for those of you returning, welcome back. And for anyone new out there, welcome. Hopefully you'll learn something and feel free to join us in months to come. I have just a couple of introductory slides here before we get things started. These will be identical to what we've done in the past months, but if anyone is new, it will hopefully introduce us to you. So we are a Yankee Model Investment Club. We're a better investing model club, which basically means we're a fully functional investment club with real money, but we are open to observation by the public. Hopefully with the intent of educating people on better investing practices, as well as how an investment club functions, either to entice folks to join our club or to go and start their own club with members of their family or friends or whoever else. We were formed in 2008. We're currently 4 members spread across Connecticut, Massachusetts, and California. We changed to online only in 2011, and we meet the second Saturday of every month at 11 a.m. Eastern. We're always looking for new members. Investment experience is not required. None of us are investment professionals. This has all been kind of a labor of love and something that we've done in our past time. And any new members that don't have any experience are mentored by one of the existing members. So just a interest to learn is all the prerequisite that we need. We don't really have a limitation on where you live except where the state tax laws require the club to file a return. So unfortunately, if you live in one of those states, we can't offer a membership to you, but that doesn't prevent you from continuing to attend our meetings and ask questions if you feel like it. All partners, they must be a member of Better Investing. They are required to actively participate in the club's activities, so this isn't a passive, just send in club dues every month and let other people do the research and the maintenance of the holdings. And each member is expected to make a stock presentation using our stock selection guide in rotation with other members. And so you'll see one of our members give this month's presentation shortly. For operations, we follow Better Investing principles. We show respect. To each other, we're all still learning in this. We audit finances annually and file tax returns and follow our partnership agreements and bylaws. Any additional questions, or if you're interested in joining, feel free to contact Jack Finn at that email address. I'll put his email address up again shortly and at the end of the meeting if you're interested. For the structure of the meeting, we'll follow a standard agenda which is currently available in the handout section. So in the control panel at the side of your screen, you should see a handout section with a hyperlink to a PDF file. That's our agenda that we follow. Feel free to follow along. All visitors will be muted throughout the meeting, but you can ask questions by typing it into the little chat window in the control panel also. And then Joe, who's kind of our moderator, will be answering those questions and we'll say them out loud if they're general enough that would be benefit to all the attendees. Disclaimer before we proceed, just that none of us are, like I mentioned, none of us are investment professionals. We are not financial advisors. We are not giving investment advice. None of the items that we'll be reviewing should be taken as suggestions for you to invest in. You need to do your own research and make your own decisions. We might own some of these securities in our own portfolios. So again, don't take what we're talking about here as advice for you to go out and invest in them. Do your own research and come to your own conclusions. And that's it for the introductory information. Our next meeting is July 11th, 11 a.m. Eastern. Here's Jack's email again if you have questions. And with that, we'll kick over to the main agenda. Let me pull that up real quick. So this should be the same as that handout in the control panel. Welcome everyone. Let's move on to the educational segment, Value Line Beyond the Reports, presented by Ira.
Okay, will make me presenter.
Yep.
All right. So you may all be familiar with the reports in Value Line, but there's other information which is very useful. So I thought I would show some of that here today. This is the, now I'm a member through the Fairfax Library, which costs about $27 a year. So this is the login screen. This is the library number. If you click on dashboard, you'll see there's a number of links here. Summary and index is the first one that I want to go over, which I already have downloaded. This comes out every Sunday, and they date it a week ahead. I don't know why. But the first thing you could see is that they have a list here of where their value line stocks stand in relationship to the market. So the first one here, price earnings ratio, their value line median is 19.7. You can see at the market high was 18, so we're actually at a high right now. The dividends 2.4%. Market high was 2.2%. 3 to 5 year price appreciation potential 65% versus a market high 45%. What these numbers are telling you is that overall in the value line universe, the market is pretty high right now. So this is a quick way of looking to where we stand versus the market high and the market low. If you go down the report, this is every stock that they follow. And these little triangle arrow symbols here means that this week they have changed their rating. So you don't have to wait 3 months for their full report to see that they have changed a rating. So here, for example, it's now 335. I don't know what it was previously, but now it's 335 for timeliness, safety, and technical. They also change, they could show you here the latest dividend has changed. The earnings per share has changed. So you could look up stocks that you're following in this report and on a weekly basis and see how they have changed their information. If you go all the way down the report, it'll take a while here. They have summarized it in various formats. Okay, hold on. It's got to be a quicker way. Yeah, there we go. So they have, for example, here, stocks moving up in rank, stocks moving down in rank, timely stocks in timely industries, stocks ranked highest for relative price performance, stocks ranked 2, stocks with 3 to 5 year price appreciation potential, best performing stocks, worst performing stocks. If you follow Warren Buffett, you may be interested in widest discount from book value. So there's a lot of sorts here that you may not have been aware of that Value Line provides for you. bargain basement stocks, highest dividend yielding non-utility stocks. If you're into yield, if you're into growth, BI type stocks, highest growth stocks. Then some overall data on the market. So that's the weekly summary and index report. Next report here on the list, I want to show you selection and opinion. So every week they start with a summary of the market, what their opinion is, their conclusion about where they think Wall Street will be headed in the near future. Then they have various portfolios that they've put together. Stocks with above average year ahead price potential. Stocks for income and potential price appreciation. Above average dividend yields. Now here, they change their sorts every week to have a different type of analysis. This past week, they had growth stocks with low risk, something else that BI people might be interested in. You can see some of these names that I'm sure you're familiar with. Sector analysis. Institutional trading. The yield curve. They even tell you the money supply. Now, the money supply is important because it's an indicator of possible coming inflation. You can see how in the past, annual growth rates over the last 3 months, 6 months, 12 months, 144.5% in the M1 money supply. So that's pretty incredible. So we don't have inflation yet, but this could be an early warning sign that inflation is coming. Insider trading. So I suspect there's a lot of info here that you were not aware that Value Line provides. So I tend to look at that on a weekly basis. And then I go over to the current issue. What I look for here, first of all, are the stocks that we're following either personally or in the club to see if they have a new report. And if they do have a new report, I like to send it out to the club here. What I like to look at also is the current stock price versus their target price range in the next 3 to 5 years. And if something strikes my eye as, wow, that's really incredible change here, then I may want to, you could just click on the stock and you could call up the report right away and look at it and see if it's something you're really interested in. The other thing I wanted to show you is under Find Ideas, they have a stock screener. The criteria you could screen on is listed here on the left. So let's just, for example purposes, let's look at projected 3 to 5 years earnings per share growth rate. So if you click on that, it starts off with all of their stocks basically. But then you could put in the criteria that you're interested in. So let's say we want to look at growth 10% to just 30%. And you hit filter. So all of a sudden the universe comes down to 590 results. Then if you put in another screen, let's say you want to put in 3 to 5 year sales growth rate. So you could see there's another place to enter your numbers here. So let's say, just for illustration purposes, I'm putting in 10%. And we're cutting it down to 111 results. And you could go on, there's all types of criteria here. I'm not going to do it all. I just want to show you that it exists if you want to do some stock screening. This shows you the stocks that have passed that screen. And if you're interested in the company, you could just click on the name. And it calls up the report. So here's Apple. You get the 3 to 5 year target price range. They also have this, you may not be aware, they have this 18-month target price range, low, high, and midpoint. So this is something fairly new for Value Line. They've now decided they want to give you a shorter term look in their projections for 18 months. If you want to actually see their latest report, you click on PDF reports, and here are the dates of their latest reports. So that's it. Are any questions?
Great, thanks, Ira. I must admit I don't use the Value Line website nearly as much as I should. I usually just log in and search for the particular companies that we're analyzing. But I definitely, do want to check out some of those reports. Looks very helpful. And you just, for your approach is just log in every Sunday or early in the week and download them and read through them?
Yeah, I log in on Sundays, and I like to look at those reports and see, especially, if there's something in the club that we own, I'd like to pass it on to the club.
Right. Okay, great, excellent, thanks. Great presentation. Looking at the agenda now, let's move on then to the club secretary report.
Okay. You want to show the meeting minutes from last time?
Yeah, I gave you presenter rights if you have them.
All right. Let me get this up here. All right.
And if you could just zoom in just a little bit, that'd be helpful. Okay, perfect.
Great. So we had, this is our meeting last month, May 9th. We had 23 visitors joining us. We approved the minutes from April. Accepted the treasurer's report, and here is the summary of it. Our holdings. We had bought a little middle B, and this is our company size diversification. We're a little light on small companies, less than $1 billion in sales. We're about where we want to be. We want to be near 50% for medium companies, $1 to $10 billion in sales. And we're a little overweighted in large companies, bigger than $10 billion in sales. Great. Brent presented D.H. Horton but we decided after discussion to buy Middleby, to add to our Middleby holdings with available cash. Last month, I presented judgment assistance for the SSG. Steve did complete all requirements for BI volunteer, and we are now a certified model club. In June, yeah, so we're already doing that. I report the number of visitors to the home office through the website. We dropped Facebook and added DHI to the watch list. Presenters, please remember to upload your SSG. I think I still don't have the Viva SSG. I think that was Steve. We discussed the new member packet a little bit. There's some documents on there on the Bivio website on becoming a member that includes, among other things, the states that we don't want to accept members from. That's all publicly available, and here are the links if you download or I should have sent you the minutes. We should get that up on as a document for the handouts next time. The club agreed to join the Visit a Club program through the BI website. I have since filled out the form, and we are now on that. And I've been invited to be the contact person for the Yankee satellite of the online chapter. And I've been in contact with the online chapter, and I think we're set for that. But I haven't heard, I don't have anything to do yet, but I'm waiting eagerly to do whatever needs to be done. And then we had, these are the people that visited, and 3 people, Sriram, Elizabeth, Liz, and Marilyn, have expressed interest in membership. And that's what we did last time.
Okay, great. Thank you, Jack. I don't say we move to accept as presented. I didn't see any errors or anything.
Second.
Okay. Moving on then, let's jump back to Ira for a treasurer's report.
Okay, you see my screen?
Yep.
Yes.
Okay, so here's the current holdings. We have $889 in cash. And the member status. Transaction history, we purchased 12 shares of Middleby at $61.77. When we picked up some dividends since the last meeting, Lithia $36.90, Visa 18, Tractor Supply $33.95, Essent $51.52, and the member payments are all current. Performance benchmark. Since inception of the club in 2008, 11.9% versus Vanguard 500, 11.8%. Looking shorter term, 18.7% versus 16%. And investment performance. Overall return 12.1% excluding cash. Member performance. Any questions?
No, looks good.
Okay.
Thank you, Ira. All right, moving right along. Steve, I'll give you presenter rights for your presentation.
Okay, sounds good. All right, can everybody see my screen?
Yep.
Mm-hmm.
Okay. So what we'll do is, instead of, I'm going to tantalize you, why on earth did I pick such an ugly looking SSG stock? How could we ever analyze this thing? But let me get into it a little bit and then I'll explain. So what are we looking at here? So we're looking at Intelligent Systems Corporation, the ticker's INS. They're on the New York Stock Exchange, and I guess before they were on the American, and they got absorbed because there was a lot of references to the Amex on it that kind of surprised me. So just be sticky from that. It's a small cap. It's worth $298.81 million, so it's a small cap. So that was one of the main reasons why I looked at this one. In addition to, I have to thank Ira for having some mercy and sending me a list to choose from, and this was the one was on it. So what do these people do? What industry are they in? What they do is they have a platform for credit and debit cards. So, and really debit cards, and prepaid cards. So what is this? So what I'm imagining this is if you're, the one that comes to mind is Sears. So if you have like a Sears card, well, if you want a card, but you don't want to hire a programming crew to do the software for it, you can either get a turnkey solution, what they call a product, or you can buy actually the platform and lease it. And with a much smaller number of engineers, you can you can have your own credit card. And so that's called leasing or services. So they have those are their two main things, and they're pretty good at it. They're in Georgia. The beta here, it's been swinging wild. So this is a 5-year smooth number, but it ain't 1.2. I can tell you that in the last week. But it's 1.2 over time. So usually things settle down to their mean, but certainly the beta is not that right now. Debt was a mercifully low 2.2 million on Toolkit, and Yahoo had 3.2 million. You know, what's $1 million between friends, right? Okay, now here, this was juicy right here. When was the last time you actually saw the company own that much of themselves? Very rare. And the institutional ownership being that low. So this, in my book, has this is juicy and has high potential for the mutual funds once they like what they're doing to come in and swoop in and crank the price up. Is this a growth company? You'll see why when I don't want to reveal it just a nanosecond, but why I think this is more of a cyclical company, and you'll see what I mean by that. Future sales. All right. Well, might as well get right into it so I can get clubbed later in the presentation here. So I'm going to reveal exactly how I picked this. And here we go. Okay, so because I'm a member of Stock Central, usually this all populates, and I when I look at it, I go, that makes sense, and I don't touch it. But here, it was 0. Well, I don't think it's going to be 0. So I clicked on this, and did I see anything in here that I really liked? No. Nothing resonated with me here. So what I did was I picked 10%, which I thought was extremely conservative, given this fact here. If we go to the trend analysis, whoops, not wrong, sorry. We go to trend graph, here we go. And we look at sales, you can see that, yeah, they had, trail, we want quarter one. Boom. Okay, so they had a little bad spot here. And then, their sales is way up, right? And we know that, and they were doing pretty steady, and then the virus hit. So this is 11 cents of this. This was going to be 23 cents a share right here. And they basically got their earnings cut in half because of Corona. So that to me is acceptable. This piece is okay. And they were going to stay about even here. So they're doing all right. Let's go back, and then we'll get back into it a little more of the reveal here, why I selected this. Okay, so management history, return on assets, 19.52, and return on equity is 29.93, phenomenal, right? I doubt they're going to be able to keep that up. And you'll see why I think they're cyclical, and they won't be able to keep that rate up, but they'll be able to keep up a good clip, I hope. The present price is $33.48. Projected PE, okay, this is another one I'm going to clubbed on. All right, let's show exactly how I calculated this. So what happened was Stock Central bumped this down to 30. And that, as I was thinking of it, I was like, oh, okay, 30, I'll go with it. No, because they're at 30 now. They're already at 30. So then I start clicking these buttons here. What's going to come out? So use section 3 averages. Oh, okay, yeah. Use it. No, I don't think. And median. No. So this is what I felt. They can hit 55 PE ratio. That's what I thought. So this makes my this should transition right into the next numbers. So then the earnings per share is $1.77, and then my forecast high price is $97.70. One thing that I picked was that I wanted to share with people. So this thing's been whipping around, and I didn't think that 30 was way too high. 80% of the current price still too high. So this looked about right to me. And it's this price variant quotient. And lo and behold, when is this it here? Yeah. When I Googled it, so this must be special to the SSG. And there was actually a explanation of what it is, because I had never, and they actually say how they actually calculate. I was blown away. So someone from the space chapter put this online, and I just thought it was absolutely phenomenal. So if you want to see how that's calculated, I was just shocked. So I wanted to share that. So that's what I picked. I picked this. So I think that's reasonable. What else we got here? Coming down. Okay, yeah, okay. All right. So it boils down to my buy price is up to $36.80, and the low piece of the range is going to be the $16.50. And my, whoops, let me bring this up a little bit. My upside down ratio, or is 3.8 to 1. my price target's 97.7. The par, scroll down a little bit. Par is going to be 16.9. The total return 23.9. And then I've also added the Altman Z, which is a measure of, because I'm scared to death of bankruptcy. So anything over 3, the higher the better, and this thing has an Altman Z of 17.9, if you can put any faith in the Altman Z. So that was another reason why I selected it. So let's go down the list, and then I'll reveal what one of my big ones here, what I think is funny. Well, it's not funny, but okay. So why did I pick this stock to review? So Ira was kind enough to send me a very good list, and I was having a heck of a hard time picking something, because exactly as Ira's analysis showed by the value line, that the market is very, very high right now. And to be very honest, I think there are a lot of dark clouds coming. And I personally will only touch a fortress balance sheet right now. So is fortress balance sheet wildly overvalued? Yes. So unless we have a downturn, then I'm not. That's the only thing that would interest me. So point being that so the stock has extremely low debt. So in March we had a liquidity crisis. So I had an ultra short-term bond fund tank on me. So because the market just wasn't working correctly. And now I think we're going to see a lot more companies other than Hertz become insolvent. So now we're going to have a solvency crisis. So this is another reason, because their Altman Z is extremely high. So, and other than the day traders saving Hertz, you never know what's going to happen in the market, but that shouldn't be happening. This is odd. So why do I like the stock? So if we look at I read the last earnings report that came out May 5th. So lo and behold, they are providing infrastructure for small business loans for the federal government. And they're able to do this because they're able to deploy on their existing core card platform. So that's a little typo there. Their core card platform. So this is wonderful news, and this certainly means that they're not going anywhere, not going to be going bankrupt. They happen to use an offshoring model, and I'm very familiar with this model because I did this for 10 years and 10 months when I was at the phone company. So it's the exact same model we use, where you have offshore and you have a small group of engineers onshore, and that's how you get things done as inexpensively as possible. So, and I know that model works. Now here we go. So now I'm going to do the big reveal here. So, and why I would pick something so ugly. So let's look at the graph. And let's really look at it now. We're going to really look at this very closely. Oops, I need the years. Here we go. Let's do it this way. There we go. And we'll pick this guy up here. Yeah. Okay. So it's probably a tool that not many of you have ever seen. This is Fidelity's Active Trader Pro. And what this does is it breaks out earnings by quarter. So what do you have? You have accumulation here for, This is showing the 5-year chart. So it's not doing too much, blah, 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 blah. And whoop, and all of a sudden you say, oh, you got a little life, and it starts cranking up. Why? Why is that? And let's coordinate with our SSG here. Okay, so you can see here that you have all this muck here. So what this company is, it's an old company, right? It started in the early 70s, I think 73, and it was initially a hardware company. And what this company does is it mutates. So it was a hardware, then it became a software company. They actually had OrCAD. That's a package that I actually used extensively. And they sold that off. And now they've become this core card platform for loaded credit card, prepaid credit cards, debit cards, and so forth. And so they shed they had another division, ChemFree or something like that, and now they're concentrating on the credit card part. And what you see here is right in here where the sales starts to peak up, and then you see the earnings starting to crank up. This is due, if you look at the end of 18 here, this is due to one very, very large customer that, and I don't know, I read the annual report and I still didn't get the customer name. I missed it. But this huge spike is from the customer, and there's an awful lot of residual service that customer requires. So this isn't going to crash because they've got a huge contract, and now they've also started with the federal government. So that's why, that's the little reveal here. Why would I even look at this junk where normally I would just even turn this off? But they have a nice big customer and it's going to be sticky. They're going to be getting revenue from that for quite a while. So it correlates with the graph. And quite frankly, people in the club know that I call these red triangles toe stubs. And this is, to me, it's okay. They didn't go negative. This is okay, and it'll be all right. It's normal because everybody else has got COVID. So that's how I'm viewing that. What else? Yeah, so they have private label. So if, let's say Kohl's already has a card, but if they wanted another card, they could go to them and you could have a Kohl's card. Oops. Okay, and there it is. So they got one extremely large customer, and I'm thinking that now that they've got this huge customer, success is going to beget success, and hopefully this will translate into more sales. And they're charging the very large customer a lot of service fees, so licensing and so forth. Also, at their campus, they have an interesting corporate philosophy. They're also a small business incubator, which I think is very, very interesting. If we do the, let's see, whoops, no, that's not right. We'll show it live here. We'll do an Alt-B on the form, and Alt-B shows that you could buy up to 36.78 for a 3-to-1 reward to risk ratio. Oops. So it's a small cap. That's the thing that drew it to me. So what are some knocks on this? So did it handle the second quarter like Amazon? No. But then who did? And Morningstar doesn't list the company. So I got what news I could from actually the website. Their corporate website was excellent, actually. So, and I thought it was very straightforward and easy to process. So I really tortured these numbers. So I'm very curious to hear Ira's and Brent's and Jack's what they got for these values here. So that's my presentation. Brent, thank you.
Okay, thanks, Steve. I guess I'll start. I must admit that I was a little bit, taken aback by the visual analysis, the initial chart. I was hoping that there was some sort of turnaround story, and it sounds like there was, maybe around the 2016, 2017 timeframe.
Yeah, 17. Yeah.
Yeah, which makes me feel better. When you were talking through it, it made me think of, the old adage that the stock isn't beautiful, but it has a great personality. Maybe
Mm-hmm.
so. If you look below the surface, maybe there is a lot of potential there. I discounted. I just chopped 2010 through 2015 off the chart, and then determined like what the historical growth rate of sales and earnings per share was just off of the remaining years. And those were like, it was 66% growth rate for revenue and something crazy like 900% for earnings per share or something. But I set the values just at, peg them at 15% for both share growth and earnings per share growth. One thing that did catch my eye, other than the chart that was kind of problematic on the front page, just the percentage change quarter to quarter of earnings per share up in the kind of upper left-hand box. So it looks like dropped 47% latest quarter to year ago quarter. But I think
Right.
you had said that was probably COVID related.
Yeah, 11 cents of the 23 that they would have had was COVID. So
Yeah.
and literally half of it was, that's what it was. Yeah.
Okay. Then on the back, let's see, a lot of this stuff, the section 2 with barbed wire fence and everything it's a little bit problematic just because of the, tarnished earlier years kind of drag the numbers down. But if you just focus at the last couple of years, it looks like an upward trend, which is good. When I was looking at high and low PE, I think what you were starting to do, I judged the numbers down to a high of 30 and a low of 15, just as kind of plucked out of the air to see where we stood. And that actually gave me a low price similar to your price variant quotient. I got $18.30 for the low price. So I'm just like, I'm right on the border of buy and hold. Buy up to like $32.10, and it's currently $32.14. So I guess it looks like a promising company. The one thing that sticks with me though is that I think it's very similar to FleetCor, right? If it's like corporate charge cards and things like that, I know that FleetCor is slightly different, but it's still, credit on a card sort of system. So if we wanted to, jump in on intelligent systems, I don't know that we would want both of those. We could argue, do we dump FleetCor because there's, as I'll get to in a minute when we go over current holdings, there's maybe some concerns with, their quarterly trends and everything. So maybe we jump ship from there and put it into intelligent systems, but I don't know that we would want two companies, that in my mind have very similar functions, I guess.
I agree, Brent. And to your point, we've got Visa, FleetCor, and then we would have Intel. So you'd have the primary, the secondary, and the tertiary. I knew this was going to come up, so I'm ready for this one. But my opinion is that people are using less and less cash, and they're using cards. So you're really seeing now Visa, they're their own brand, right? I don't think you can go to Visa and get have your own credit card. These people make their own credit cards. FleetCor does the fleets. You have I don't know, 2,000 tractor trailer drivers that need diesel fuel. Well, here's your card. I think there's increased digitization. Like in India, they went from where they only used cash to everything is done on a card so it can be tracked. I think it's going to be more and more cards. That's my defense for it. And not to say that you're 100% right. We've got Visa, FleetCor, and this would be like the third level of it. So you're absolutely right. So there is a risk in that it would be too much in credit cards.
I'd forgotten that we had Visa, so that is true, and that made me think of I was out driving yesterday, and I happened to pass by a gas station, and I don't know if it's the true out in New England, but over here we have some of them that charge different rates whether you use credit or cash, and surprisingly, for the first time ever, those prices were the same now. It was usually they gave a little bit of a discount, I guess presumably because they didn't have to pass on the whatever the transaction fee from the credit card onto the customer. Usually it was a couple cents cheaper to do cash versus credit, and now they're the same. So maybe that's following on with in this day and age, people don't want to deal with physical cash, so that maybe that's a sign of the times that more people are going to be going to credit and encourage people to use credit.
Yeah, to be very honest with you, Brent, I don't even touch anything at the store anymore. I only go to stores with Apple Pay, and I put my phone next to it, and I'm careful not to touch it, and I pay that way. So I go to the extreme, I guess, but I think it's going to be more and more like that. Yeah.
Okay, interesting. Okay, Jack, Ira, you guys have any comments?
Yeah, I ended up doing just about exactly what you said. You did ignore the first 4 or 5 years and look at the rates that show up then. And yes, there's clearly a change in the way the company operates because the numbers are completely different. So I end up with a buy of $34, I think, buy up to 34, which sounds like you're in the same boat, Brent, or that near the present price, basically. So I think the other thing I like to say is that I am astounded by how good Viva is doing, which is the last stock that Steve recommended that we did not buy. So I think we should buy this one.
Because Steve might be onto something.
Steve might be onto something.
Okay. I have very similar numbers. I picked a little bit higher growth rate, but I picked a high P of 30 and a low P of 15, and I ended up with a buy up to 34, same number. And I had the same reservation about FleetCor and Visa, but actually FinTech is doing very well, financial technology type stocks. So I think we could actually put it in the portfolio. This is covered by the Investment Advisory Service. They also did away with the first 2010 to 2015 in their analysis, and they have a buy up to 41. The stock on Friday was the stock on Thursday was at 32, and on Friday it's at 36. So it's just showing the volatility of the market right now. But overall, yeah, I think it's a small cap. We need more small cap in the portfolio.
Yeah.
I like the prospects of the company. When we go over lithium, we might want to reconsider lithium. I'll go over that when we go over the stocks here. So if we were looking to buy, that could be a source of some cash.
Okay. Out of curiosity, how did this come up? Was it from the investment advisory list that we got this idea?
Yeah, I sent a spreadsheet to Steve of their stocks and sorted it by growth rate. They have
Okay.
a much higher growth rate. And Steve picked 10%. Is that right, Steve?
Yeah, I picked 10. Right, that's right.
Yeah, they're up more like at 17%. And they have a buy up to 41.
Okay. If there's no other discussions on that, let's move on to discussing current holdings. Ira, I'll give you presenter rights if you have the Bivio list up of our current holdings.
Okay. Hold on.
Sure. So I'll kick it off. For FleetCor, this is what I was alluding to earlier. I saw that 2 quarters, it appears to be 2 quarters of a reduced earnings per share and pre-tax profit from the Toolkit quarterly trend analysis. Share prices recovered some from the dip earlier in the year. It's outstripped the S&P 500 on performance. So one thing that I wanted to bring this up, it's currently in a hold range. It's $256 compared to $233 for a buy. One thing that we could consider is if we think we'd be diluting, having the 3 companies that we just mentioned, FleetCor, Visa, and if we wanted to invest in intelligent systems, we could look at liquidating FleetCor, which I think it was in the large cap segment of the pie that Jack showed, to support investing into the intelligent systems one, which would shift us, at least get 2 small cap companies onto the portfolio, which could be good to rebalance the portfolio slightly. Athene, their executive vice president, I think from risk management, stepped down due to health reasons. So they bought in a replacement, an outsider, it sounds like, from Guardian Life Insurance, but he has 20 years experience. So that they're not expecting any major, hiccups to how they operate. They surpassed Q1 estimates, and they recently offered 24 million depository shares to fund what they quote corporate purposes and investment opportunities. And company AM Best rated these as BB plus for quality. And then Tractor Supply, Athene, I currently have in a buy range, $29.87. Our buy limit is up to $49. And then Tractor Supply, this was one of the few online retailers like Target and Walmart that have actually seems to have made strides against Amazon's market share, because even though Amazon is so widely known and so widely used, due to the demand and the pandemic, they've kind of breached their 1 to 2 day shipping window, while these other folks, including Tractor Supply, have been seeing their curbside pickup options really take off. So that, feeds into people's need it now mentality, that they can order online and then pick it up right in their area. They're touting they're planning for a revamped website and a release of a mobile app at the end of June. And they quoted that rural is the new urban. I think they picked that up from, I think it was a MasterCard presentation or something like that. But basically that city dwellers are looking to kind of move or vacation more in rural areas, and they're seeing a big uptick in gardening and like home-based pastimes or hobbies or home improvement sort of thing, as people have been homebound, quarantined, and working from home. So they're seeing some increase in those areas of sales. Currently have a Tractor Supply in the hold zone. It's $119, and our buy is up to 66. But it's been going great. It sounds like that they are continuing with their strides to protect their employees during the pandemic. I think they're extending the pay raises for another month or so, and have put in permanent pay raises for some of the frontline employees, as well as give medical benefits and I think preferred stock to some of their employees. And that's it for me. Steve?
Yeah. So we'll go with Visa. Visa I have in the hold range. They bought a company called DataGood, and they see massive increase in digitization. Surprise, surprise, nobody wants to touch anything. So they're in the hold range and solid, almost fortress balance sheet, if not fortress balance sheet. Alphabet is in the hold range. They still have 117 billion in cash, and they are the fortress balance sheet of all balance sheets. So there's been some parasitic lawsuits and some antitrust, and they have $117 billion in the bank. Who cares? Mid. There was no news. The thing shot up like a rocket, and there wasn't a story on it. So this is in my buy range, and now I've got it as a buy up to 104. So this is still well within the buy range, and people have got to eat. So, maybe they're not going to buy a Viking appliance, but they need to eat. So, and they've got the equipment. So I don't know. That might be a good one again. And we've got three buys. I'm shocked that we were in the negative on this when I saw that I hadn't looked at the Bivio, because when the shares that we bought went way up. So I don't know. Yep. I think that's a potential buy here. That's what I have thinking.
Okay. Ira?
Yeah. With the same store sales, in the last week of May, we're up 22%. But overall in May, the same store sales were down 7%. What was troubling me about Lithia was the analyst projections are like 2% growth in the next 5 years, 3%, and my upside to downside ratio is just 1 to 1. So, and the stock price is at 127.66. I had a buy up to around 120. But now I'm rethinking it that going forward, we may want to ring the register on this one. Because, I don't, if you believe the projections, they're not very good. So, I have mixed feelings about it. It's either a hold or a sell. Regeneron is still on a tear. They are beginning human trials on their treatment. And stock is just been surging, on this. I have it as a hold. It's near but it's near the top of my hold range, almost into the sell range. And the higher that Regeneron goes, obviously the riskier it is, right? And then hopefully the human trials will pan out on their treatment. But if it doesn't, this is going to crash way back. So I'm not saying we should sell it, but I'm just saying that the risk is increasing in Regeneron quite a bit. because my buy is up to like 383, right? And it's at 588, right? And it's been up into the 600s as well, jumping around quite a bit. Gentex is the only stock that I have in the buy range with an upside to downside ratio of 4.2 to 1. And I don't have any new info on that one, but it's a good stock, and we could add to it.
Ira, I've got a question.
Mm-hmm.
So Lithia Motors sells automobiles, and they haven't been making too many automobiles. And when they tried to open up the plant, they had to shut the plants back down. I would think that they would be inventory hampered, or were you getting any vibe on that at all?
I don't really have an answer to that one. I know the new vehicle sales have been down 10%, and they also have a lot of used vehicle sales, which was down 14%. But you have a point there, and yeah, that could be. It just, I think, it's very murky what the future will be in these auto sales for them. So I don't know.
I agree.
We have a good profit in it, and it's almost 11% of our holdings, which is kind of high. We'd rather have 7-8%, right around there.
Yep. Okay. Essent. Essent reported May 28th. Its sales are up 14% and earnings up 16, almost 17% for the first quarter. They also did something that I missed the first time around when the news came out. About the same time, they said they were going to offer 12 million shares at $33.25 and use the proceeds for capital contributions, whatever that means, and paying down debt. That's about 11% of the outstanding shares. They also, in other news, they passed a stress test earlier this quarter. And they're joining the S&P Midcap 400, so they might get onto more ETFs or something that way. Dollar General, so they're a hold. Dollar General has been flirting with its highs. It's up about almost $10, depending upon what hour you're looking at, from last month. They announced earnings too, and they did spectacularly well. Their earnings were up 72% from a year ago, and revenue up 27%. Both beat the estimates. They're not quite near my sell, but they're getting close. They're well above my buy zone, so they're in the hold. Ulta is a buy it has come back from earlier this year. They're down a little bit, about 1% or so from last month. They announced earnings and they didn't do so well. The sales were down 32% to 1.1 billion, and earnings were down 142% to minus $1.39 per share. So that's because I think they closed 70% of their stores. I think they said 300 of their stores were open, but they clearly weren't doing that much business. They do have an online business that's bringing in a little money, but so Ulta's in the buy zone, although I think nothing's going to happen to their earnings picture until the third quarter, probably. Okay. That's it from my stock parent report. The watch list, 5 below is a hold. Viva is in the sell range. It's actually above my price, my highest price. So my SSG says invalid because my high price is not lower than the present price. So clearly, I don't know what's going on there. Also, the PE ratio is, I think, about 100. So something amazing is happening at Viva, and we should have bought it in January, whenever you presented it. And then DAR Horton is a hold. So that's it for me.
Okay. I made a note that it sounded like from these the sell candidates were Lithia, and I'd put out FleetCor as an option if we wanted to sell that. Buy candidates are Gentex, Intelligent Systems, Middleby, and Ulta. Were there other buy candidates that I missed, or sell candidates that I missed? Okay. I think I agree with Ira. I don't have, I would imagine, because my car has been sitting in my driveway for the last, 3 months, I'd probably be better invest in car wash technology than actual cars. But I can't see that, I can't imagine that the car sales would be, taking off in the very near future. What is nice is that surprisingly, it looks like that we still have a profit on that. Close to what, 30% or 40% of our initial cost, which is, I think, a great growth rate for that. So I'd be in favor of, liquidating Lithia. I would also say that even though maybe all three of the financial companies could be, beneficial, I don't know that we're going to see much additional growth with FleetCor. And it's, like we said, a large cap. So I would be in favor of also liquidating FleetCor, leaving Visa alone because that's been great. And then that frees up.
Brent, FleetCor shows up as a medium-sized company on the BI size diversification chart.
Oh, does it? I thought it was in the large. Okay, sorry about that. Okay. Well, I guess that's one that I would still be.
No, I think your point still holds, but
yeah, but it's not a large cap. Gotcha. Yeah. Okay. Okay. Well, why don't we'll take it maybe one at a time. How about all in favor of liquidating Lithia?
Yes.
Yes.
Okay.
Yeah.
Gotcha. Okay, let's do that then. All in favor of liquidating FleetCor?
No.
No. I'm kind of a firm maybe.
Okay, I'll take that as a no then. So, okay, for selling then, I just have Lithia. No other proposals to sell.
Okay.
Okay.
Yep.
Then to buy, Steve, do you want to pitch that we actually buy Intelligent Systems?
Yeah, and I hadn't checked the analysts. They're very bullish actually on Intelligent Systems because I'm comparing FleetCor to Intelligent Systems, and there are 4 analysts that follow it that are very bullish, and they in Fidelity, a 10 is the highest you can get, and they've got a 9.7. So, yeah, I think that they're a tiny company. They only have 530 people, and it has some potential that could skyrocket, especially fintech. So, how I would do it is, because the credit cards have just been pouring money into our pocket, I would really go Visa, FleetCor, and I would do first, second, and third, and go with it, with the intelligence systems. And I guess what I'm looking at is there were 3 buys on the table: intelligence system, Gentech, and then what was the other one?
I think I had 4. It was Middleby and Ulta were the other 2.
Middleby. There we go. Yeah. So Ulta, I wouldn't put that on the table. Middleby, people, that's an absolute that they have to eat. I'm sorry,
Yep.
Jack, go ahead.
They have to have lipstick too, or some of them do.
Well, see, I think what we're missing there is this. They're doing not so hot. They're doing okay probably on their web buying.
Yeah.
But that's when a person goes into that store, oh, I'll just get this, and and that's where they get their sales. Yeah. And people can't go into the store. So I wouldn't buy that.
Yeah.
But I think people need kitchen equipment. Yeah. So I would tend to go with Middleby or the INS, and then I absolutely love that company, but autos, right? Who do they sell to? Autos. And I think we're going to be, I think what you're going to see is this. Obviously, no one has bought a car in 12 weeks, right? Not one. They're not making any. You're going to see a spike up in demand once all the clunkers that people absolutely that have their cars are broken, they have to buy a new one. And then you're going to see it go to zilch again. So I'm not for the autos at all. And I think, although I love and Gentex and want to keep it, I wouldn't add to that now. So I would either go with buying intelligent systems, or dare I say it, more Middleby. That's how I see it right now.
I propose that with the money we have from Lithia plus our cash, that we don't put it all into intelligent systems, because that would give too high a percent of the portfolio in that one stock. Mm-hmm. But I would buy it up to about 7% of our holdings, and with the remainder of the cash, put it into Middleby.
Yeah, I like
that. I second that. Yeah.
10K into intelligent systems, and then the remaining 5 or 6K into Middleby.
Whatever 7% would be,
that would get us close to that. Yeah, I think that's right.
Also, if we could get it around 36 or below, and the market is so variable right now, that would be good. If you could put a limit order and try and get it at least at 36,
Okay. I'd be in favor of that. So about what, 2/3 of available cash into intelligent systems, and then the remaining into Middleby, however that pans out.
Yeah. Mm-hmm. So that would get Middleby up to about 13,000, which would make it about what, 8%, something like that.
Yeah.
A little over 8.
It'd be number 5 or so in rank, so it wouldn't rocket to the top.
I think that's okay. We'd still be bringing down the cost basis, because I think it's now still $25 lower than what we bought it for, or what we've ended up buying it for in our combined buys.
Mm-hmm. One thing that I've wondered about Middleby is I would share the same concerns of, who's going to restaurants now, even though as states reopen, I'm sure people will be clamoring to go out there. But one thing that we've done, even myself, is that, as we stock up more, not only for pandemic, but also for earthquake prevention and things like that, or earthquake preparedness, I should say, is buying like a freezer for the garage. Now, I don't know if Middleby is too industrial to, be supplying stuff to residentials, but I know that we've put a order in and we're in a wait list to get a freezer from Lowe's for it's like a 3-month lead time or something.
Yeah.
So I wonder if Middleby is getting that advantage of kind of overflow from more individuals buying from like the big box stores, going to buy stuff that if it's available, they would pick it up.
Brent, they sell Viking refrigerators. So people that don't want to wait, that can afford it, I'm sure they're buying the absolute top end product. So,
yeah, that's true.
Yeah, I don't think you're going to have a 3-month wait from Viking, but I don't know.
Right.
So you could, I don't know.
You have a generator, Brent?
I do. I do have a small generator actually that my friend gave me. I need to fire it up and make sure it works, because I don't think the time to be doing that is when all the lights are out.
No.
But, yeah. Okay. Sell lithium motors, buy intelligent systems, and Middleby. Any other buy or sell moves? No? Great.
No, I think that's good.
Okay. And then you're taking care of the transactions, Jack?
Yeah.
Okay. Excellent. Then we'll move right on to, in the agenda, old business. I have the standard of conduct. Oh,
before we move on to old business, I have 4 questions related to the presentation from Stephen.
Okay.
The first question is, what happened to the earnings per share in 2015? It showed a big dip.
Yeah, it went into the ground. So I'll be very honest. I don't know exactly what happened, but they sold one of their companies called ChemFree. So, and I know that they've jettisoned all their big companies, and they're concentrating on the core card platform.
You're saying basically they did a restructure and took some hits.
Yes, exactly. That's how I perceive it. Correct.
Another question that I'm asked is, who is the large customer, and is that a diversification risk?
That's an excellent question. And I read the annual report, and I Googled it, and I couldn't find who their large customer was, but they do have a large customer because their annual report said so, and you could see the financials change.
Okay.
So that's an excellent question.
Okay. The third question is, what did the IRA list mean? What did the term on the IRA list mean?
I think
that's just the IRA. That was just thanks IRA for providing the
IRA,
list.
IRA, our member.
Yes.
Oh,
correct. Yes.
All right. That takes care
Go
of the
into a
question.
bank and say, "I'm Ira. Where's my IRA account?"
Yes.
Yeah.
Those were the unanswered questions that I could not answer.
Okay. All right. For old business, the standard of conduct signature, we're all set on that. Is that right?
As far as I know, yes, we're good.
Perfect. Okay. Then for new business, Joe, do you know, is Liz with us this morning?
Yes.
She is on here.
Okay. Can you unmute her and let's talk through, or bring the others up to speed if there's been conversations like over email regarding if she's still interested in joining and when we
Yes,
can
she
schedule
is.
her presentation.
I have unmuted Liz.
All
Hi,
right.
everyone.
Hi, good
Hi,
morning.
Morning.
So I guess where do we stand? Have you had any conversations with Jack or others? Are you ready to schedule a stock presentation? Where do we stand?
Yes, I'm ready to schedule a stock presentation. I'm going to be working with Jack to help me. This will be my first SSG. So we're going to schedule a meeting for this coming week.
Yep.
Okay. Do we want to say, or would you be ready to like do the presentation in July, or should we push it to August, or what do you feel like?
The procrastinator in me says August, but I'm also feeling like if I have a deadline, that would be good. A closer deadline to get me to jump into the deep end of the pool. So,
Okay.
so let's say July.
Okay, Jack, are you all right pushing out? I'll just shift everyone 1 month to the right.
Yep.
I mean, if that's okay.
That's fine.
Like I said, there's a part of me that would be quite relieved to say August.
Yeah. Okay.
I think you should go for it, Liz.
Yeah, I think so. We're pretty respectful. So
Most of us are.
there won't be any tears. Don't worry about that. Okay, and then Jack, you're sharing the I guess the spreadsheet like template that we use
Yes.
to kind of guide the presentation. Yep. Okay, gotcha. Okay, and so then I will for next month's agenda, I will put Liz for the stock to study presentation.
Yep.
I will be presenting the educational segment in July. Any other like questions or comments, Liz, for that?
No, I don't think so. I think I'll work with Jack and I'll go from there.
Okay.
Good. So
Would you send me a copy of the spreadsheet also, please?
yes.
I think I didn't put the name down, but I think there was another gentleman that's been with us now for 3 sessions.
Yeah,
that was also Sriram. Okay, is he with us this morning? And can we unmute?
Yes, and I'm going to unmute him. And well, there we go. He is unmuted, but he is self-muted. Sriram, you'll need. There you go.
Yeah, can you hear me?
Yes.
Yes,
Yes.
sir.
Good morning, gentlemen and
Good morning.
ladies.
Good morning.
No, I am excited. I think I am very impressed last 3 months, whatever I've seen, and I am ready to jump in. So if I could, I certainly would like to speak to somebody, maybe one-on-one, couple of people, just to get a little more familiarity with you. And then using that information, like I said, I'll be happy to be part of this group and maybe even present an SSG in August.
Okay.
Would
great. Do you want to schedule that now or wait until after you've had those kind of one-on-one discussions?
No, I mean, I'm very certain I'm going to join in, but yes.
Okay.
Yeah, please go ahead and schedule for August. August, can you tell me what day it will be? The second
Saturday.
Yes,
okay.
second Saturday. So that would be what, the 8th?
Yes. How, if I by chance if I miss a meeting, what will be the penalty?
There's really no penalty. That if you miss a meeting, there's the monthly dues are still required.
Of course.
Generally, it's the preference would be let us know, as far in advance as possible, and if you can give us, a couple line summary in the email of what your stocks are doing, because once you're into the club, we will assign you a couple of stocks to follow, just so that there's not a gap in that as we discuss.
Absolutely.
So yeah, here or there, missing the meeting is not the end of the world. If it's you need to take an extended period of time off, like many months in a row, we'll discuss that, if that ever should come up.
Absolutely. Again, occasionally I may go to the other side of the world, in which case I may have to get up at 1 o'clock in the morning to attend this meeting, but actually 10 o'clock in the night, not too bad. No, I think it'll be fine. I will be, like I said, I certainly would like to talk to a couple of you and maybe get some insights, and then I'll be ready to jump in.
Okay.
Okay, I'll send you my phone, and we can have a little conversation, Sriram.
That'll be wonderful, John.
Okay, excellent. So then, yeah, we will look forward to Liz's presentation in July. I'll pencil in Sriram for August. I didn't have any other new business topics. Is there anything else that we need to discuss?
Yeah, there was, Joe said there was a question about how to get value line, and I can show the document that's on the website, on the Bivio site, that has a little blurb about how to get the Fairfax County Library value line service.
All right, you want to show that now?
Yeah.
Okay. I made you presenter.
All of our questions today had to do with value line.
Yeah. So this is, let me just back up here a second. This is one of the documents in the public folder in on our Bivio.com site. This is the whole site, but if you log into the address that's in the agenda for the new member packet, you'll see just the public part of this. And the becoming a member document talks here about the rules of how to become a member, but then you need to have access to the value line reports through Fairfax County Library, or for other libraries. The Boston Public Library, for example, has it in person physical copies, but nothing online. And then you can also, if you have lots of money lying around, buy it directly from Value Line, which is usually what the libraries do anyway. So just look up Fairfax County Public Library, Fairfax, Virginia, and you can log on there and pay them $27 a year and have access to Value Line and all the other online books and all the other online stuff that they have.
And this is what you had said we should add to the handout section of the meeting.
Yes, possibly.
Yeah, that.
Yeah, I'd agree with that. Or was there another document, Jack, that you suggested we?
The minutes might be good.
Oh, the minutes. Yes. Okay. Gotcha. Yeah, I think for next month, why don't we plan on agenda minutes from this month, and then this
thing. Yeah,
this thing.
That's good.
Okay.
Okay.
And I might ask for a change or two to this, but I'll get with you later.
Sure. Okay.
Just a note, if you join Fairfax Library, for example, you have Morningstar access as well.
Oh, yeah.
Yes, you do.
Mm-hmm. Okay.
Okay.
Thanks, Jack. Any other topics? Okay. Any other final questions or comments, Joe, from the attendees?
I would have you note one of our attendees today is a fellow by the name of Bob Hewell. Bob is a member of the online chapter like I am, and he came to listen, and he's liked very much what he's heard today. He's also the fellow that put that price value variant quotient thing in the Space Ghost chapters website that you referenced earlier today.
Great.
Cool. Okay. Well, welcome. All right. Well, if there's nothing else, thank you all for attending. Like I said, we are meeting again. Well, we meet every month, second Saturday. Our next meeting is July 11th, 11 a.m. Eastern. If you registered for today, I believe you're auto-registered for at least the following 2 meetings. If not, feel free to re-register at the website. Any follow-up questions that you think of after we hang up, contact Jack at that email address, and hope to see you back in July. Thanks, everyone.
Very well.
Bye.
Thanks, Brent. Bye-bye.
Bye, Brent.